Have we just witnessed the all-in moment when retail traders go so ballistic on leverage that markets are forced to sell off? In today's video, we take a look at what Wall Street is up to as it runs the buy the rumor, sell the fact playbook into this earnings season with financials, and how Nvidia may be the thing that potentially could turn it all around. There's a lot going on, and there are plenty of opportunities, including potentially markets that you may not be even looking at. Stocks, commodities, and cryptos, guys, don't go anywhere. There's a lot to get into in today's special video. See you in a moment. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, a lot to talk about as usual. We've got what's going on this earnings season, what just happened to Nvidia with the big movements in chips, and of course, whether the market can sustain over a period of seasonal weakness. We'll break down the show, going through the macro, the data, and the flows, and boy oh boy, have there been some big movements over the last 24 hours. Let's jump into it straight away by taking a look at what just happened to some of the major banks after their earnings announcements. And you can see here that Wells Fargo was down as much as almost 7% on the day, finishing around 5%. Why was this though? Well, JP Morgan, it was an EPS beat. And of course, Wells Fargo also beat on EPS. And you might say, well, how could it be that markets were going down over the time when we actually saw everything technically looking pretty good? Well, this is what we call a buy the rumor, sell the fact. And we kind of expected that this may occur across quite a lot of stocks as we're getting what we call price to perfection happening in these particular markets. The little worrying sign, though, was that Wells Fargo in Q2 2025 earnings showed that short-term borrowings rose 34% quarter on quarter to $188 billion. And this was likely including repos for liquidity. So could this be signs of maybe people falling behind on their payments and therefore a decent amount of repos coming back through? I definitely think it is. The Sun Belt is, of course, something we've been talking about in the US, and we'll continue to have some specials up and coming on the show for that. So make sure to subscribe, as what is happening here in the debt markets is going to be the storyline, I believe, of the next 12 months, and we're just looking for those signs. So what was a good case? We had kind of the banks coming out looking pretty good on the surface, but still the market sold off at the trend line. Well, Nvidia did get a bit of a win here, and it looks like Trump made an announcement that H20 chip licenses will be able to be sold overseas. So basically, we're seeing chips flowing overseas once again. And I am kind of, not that upset about this type of move. I think it's a pretty good one. Basically, there's this idea that Steve Jobs had, which was the honey and the bees. And the idea was that if you have, let's say, infrastructure, and you'll know that Steve Jobs did this with Apple, he effectively had the honey, which was things like the App Store, then he would encourage people to develop on that platform. And in this case, of course, that's exactly what we're looking to get done if you're the US and you want to win in AI. You need people to use the platform, in this case, Nvidia chips, and to develop and to create hardware based on those chips. So yeah, it's not a bad idea to ship everywhere and to, of course, allow those chips out. But what do you guys think in the comments down below? Is this a big win? Is it just kind of already instantly priced in? The semiconductor stocks were up between 4 to 7% on the session off the back of that news. Now, of course, we did get a inflation number as well, and it came in hotter in maybe the sectors that you don't want. And which ones were the hottest? Well, we saw food away from home up 0.3%, both what we call sticky. And of course, we continue to see shelter every single month of the year going up. So again, the sticky sides of inflation, they were all going up. Some good signs were, of course, in new and used car vehicles. It's getting a little bit cheaper to buy those extremely expensive vehicles. But I think overall, you can see here the trend is a little bit of a pickup in terms of inflation. And although this was expected for the market, so it came in exactly where they kind of expected it, it is something that we need to keep watching. Because remember, we've been talking about this on the channel. 3 to 4 months after, and maybe this time around it's 6 months after, because we knew that there were going to be tariffs imposed. So a lot of companies bought way more inventory. I've heard some businesses out there bought 12 months worth of inventory in advance. Maybe we are going to start to see some inflation come back in. Take a look at this chart here. Non-alcoholic beverages were the number one. Fuel, gasoline, electricity, fruits and veggies hurting the middle class in this case. Hospital services up again. And even if you want to smoke, Yep, it's more expensive, guys. Probably don't do that one though. On the good side, I guess, was meats were down a little bit, but really eggs were the big one there. And as you guys in America know, I still can't believe how expensive they got because of course, those shortages. But they're coming off like a vertical up like this, so they're kind of just coming back to a more middling price. What is the price of eggs per dozen in your area in the US? I mean, here in Australia, you're probably paying around $7 to $9, and for the general kind of eggs. And in America, I'm pretty sure you're probably paying the same amount, but it's American dollars. Likely targets for tariffs. So have we started to see the tariffs play a little bit into it? Appliances, those ones are spiking up. So appliances getting more expensive. Household furnishings and supplies getting more expensive. Apparel, I expect this one to jump a lot more. And as you can see here, transportation, commodities, less motor fuel. Well, that one's been declining a little bit. And there are quite a lot of cars on lots in America. I've heard there's almost 12 months worth of supply. So maybe that's not going to be as big an issue unless you're trying to buy a hot in-demand car that needs to be imported straight away. If you want to buy something that's not that popular, I'm sure it's going to continue sitting there and be available. Asset managers versus the current stock market. Now, we've talked about this before. It looks like fund managers have continued to be behind. And the latest Trend Labs report here shows the same thing. Asset managers have been effectively not buying this market. Retail traders have. And it alludes to the chart that we're going to show a little bit later on, guys, which is that retail traders are super in this market. I mean, super leveraged out of their minds. Some of you guys might be leveraged out of your mind. Be careful out there at all-time highs. Because while, yes, hedge funds have to get back in, especially if markets pull back, they're going to start buying, and that is inherently some demand. If you're leveraged up and Wall Street choose to pull the rug, it could be a big problem. Good news is for retail traders that when we saw those Brett thrusts, the 7070, the Zweig Brett thrust, all those ones were reported on around here, and we kind of said, yep, this is a huge, big bull sign for the markets. It always has historically been one. Then you can see here 97% of the time, according to High Mount Research, we are bullish over the next 12 months. So it kind of points towards, even if we come back, generally speaking, we will pick up and continue on. But notice that we've disconnected from the general trend of previous Brett thrusts. And you might say, well, that's because AI is growing the market or something else. But yeah, for sure, when you're looking at these NASDAQ data, when you're looking at the S&P 500 data, it's kind of pointing towards 1 month, 2 months, and then 3 months. Yeah, okay, the first two could be pretty good. 3 months tends to be where we start to find the problems. And if you think about it, that all happened around April, May. So where are we right now? Well, we're about that 3 months on. So it makes sense that maybe we get some kind of pullback in this earnings season. And this is a really important factor, and we'll go through that seasonality soon. What about new highs? Well, we've had 8 new highs here in 2025, according to the latest Ryan Detrick report. And you can see here that that tends to be kind of unusual not to see a lot more. So 2025, 8 so far. Usually you get more of them. You get clusters. Sometimes you might get upwards of 70 or 77 new highs. This time we've only got 8. So whether it does pull back or not, there's a good chance that it will actually start to find buyers once again. In the crypto space, Ethereum, Bitcoin, XRP now with the announcement that just came out, which I believe is a 2 times levered fund, all of them have a lot of heat in them at the moment. Charts will come up later on today's show, but they've pulled back a bit. They may come back a little bit more, but I think the overall trend of at least the last couple of months has been bullish. That is, flows are back, and deregulation, tokenization, and everything we've been talking about in the show for the last couple of months, that has come through. Another thing that's starting to really happen underneath the hood is it looks like hard metals. So particularly metals that aren't the precious ones. So things like iron ore, things like aluminium or aluminum in America, and all of these types of copper, etc. It looks like they're starting to turn. And rare earth minerals, we saw the announcement with MP and Apple just 24 hours ago. These are all starting to look like this. They're all starting to kind of come off what is relatively cheap bases and start to look really good. And this makes sense because it's a mixture of geopolitical tensions forcing, of course, the defense spend. And it's also a mixture of people realizing that we need these minerals, metals, and other things to support the AI revolution. So if you want those millions of robots floating around cleaning your house, you're probably going to need some of these rare earths and minerals. So could we be going into one of the biggest times we've seen in probably over 15 years for these metals coming off low bases? It's certainly an argument to be made. And that gold versus metals chart shows that metals currently are actually underpriced, not just, gold now that's kind of, maybe fairly or still a little bit underpriced. Some of these other ones are just cheap. They're just cheap. They really haven't seen that inflation in them. Now, here's where we get to the big chart. Retail activity. Wow. It's up, guys. It's up big time. Retail activity has increased to the highest level since 2018. And realistically, it is massive. So we have retail fraction as percentage of total single stock share volume going up. And this basically shows broad-based speculation. We've already talked about 2 times levered ETFs becoming the most popular kind of trade of retail. And the fact is that these don't track as well as people think. So when things go bad, things really go bad for retail traders. If you've ever looked at a chart of like FU or a chart of any of these 2 times levered funds when they've gone poorly, it's not very good. But look at the trend. I mean, this thing we've been talking about for a few days now, it's up big time. And it's just a matter of time before Wall Street says, haha, we're going to trash on your great gains and we're going to cause some form of crisis. Now, is that a massive crash crisis? Probably not, but it does open up the typical kind of pullback period between 5 and 10% that does happen sometimes during this Q3, Q4 period. Now, another concern has been bonds. We've talked about US 30 and, of course, the Japanese bonds, and the yields are just spiking. People are demanding more money. That is a higher interest rate to take on these debts from central banks. But take a look here at the decline in liquidity. We posted this over on our FX Evolution X or Twitter account, and you can go follow that. Links in the description down below if you wish to. But have a look at this spike of illiquidity. This is not great. So basically, we have a problem that's usually for periods of time when you've got kind of a crisis, but we don't even have a crisis according to the markets, but liquidity is drying up. So yeah, people are demanding more. And remember, the US has to do a whole bunch of massive refinancing coming into the end of this year. So that goes into early 26. What is going to happen if the long yields continue to spike up? Is there going to be a real crisis in the US market similar to that Liz Truss moment? It is possible. S&P 500 versus 1998, the dot-com bubble versus possibly the AI bubble. Where are we right now? We're in what usually is a pit. That is basically, it is a period where the markets go sideways or even potentially down. We're at that point where if the turn is going to happen, as we mentioned over the last 24 hours, it probably happens around here. Christmas in July ends around the middle of the month and then tends to have a bit of a pullback. Yes, a lot of people know this, but still it really falls into line with quite a few things. The trend line, the correlation with the dollar index, as we've been talking about, all of these things kind of come together. And remember, this market is everything market. So if you're seeing a pickup in crypto and everyone's moving their money over there, then that could be where the flows are going, silver, crypto, other things. And we have started to see cash be put into the markets as well. So we're seeing basically cash that's available declining heavily. And that usually means that there's a bit of leverage in the markets. And it makes sense. This is a kangaroo style of year. We knew that in late 24, and it continues to kind of look like this. On the good side of things, it does look like at least the stocks in some ways are cheaper than they were. Even though we're at all-time highs, some of the big tech stocks, semiconductors, are cheaper than where they were last year in terms of what the expectation of the street is. But remember, I always look at the left-hand side. And the left-hand side shows us a V-shaped epic reversal. And that coming into earnings season does open its way up to the buy the rumor, sell the fact. And that's kind of what we saw just then with the banks kicking off things. Pretty good earnings, no doubt, but some little questions underneath. And just also Wall Street saying, haha, we're going to reduce the position on you. And of course, the big one here is going to be Thursday. TSM, Netflix. We already know that the chip manufacturers are doing really well. But Netflix also will kick off big tech for us. Implied vol, this is what the options market expects. Netflix is the big one here. Expected move upwards of plus minus 8%. And of course, these are the crowded positions according to Goldman Sachs so far. So we've got kind of like a lot of crowding in the most popular stocks. And then, of course, we've got crowded shorts as well and all sorts of big movements that could happen. So these are the implied moves coming into this earnings season. A pretty good one, I think you guys would agree. Let's now have a look at the S&P 500 and break down what's happening in the most important market in the world. So did we get to the top of the trend line? Yes, in the Nasdaq, not really in the S&P. But what we did see was the market testing that popular 6,300 level. So let's have a look here. You can see the real market hit that 6,300 level and sold straight off it. Why is that, you might say? Well, it's a call wall. There are so many options at that zone. And it's kind of like there was an announcement for the banks started to weaken. And then straight as that CPI announcement came out as well, we got this, oh yes, the chips are available now to send overseas. And that gives, I think, about a $93 billion injection. So all of a sudden, all the semiconductors repriced themselves and they look pretty strong. But the rest of the market's like, no, I don't like this earnings season that much so far. So yeah, it's a catch-22 at these levels. Here are the options, high and lows. You can see here the consolidation. It still is in an upward trend. There's no doubt. Like if you're a buyer, where's the sign of sell? It's just that we're getting signs of overexposure. We're getting the trend line. We're getting these reasons. Some people will clip or take off some profits at these kind of zones. But realistically, this is not what you would call like a wow, heavy sell kind of moment. Remember, in technical analysis or anything, what you're doing is you're following the flows and the trends. And we're still looking for a lot of large transactions to come through. And I haven't quite seen those pop up yet, but I do expect them to come through with this earnings season. Let's now have a look at the S&P. It's all about 63 and all about 62.20. And you can kind of see here, no matter which day we've been looking at, it does continue to be 63 is a huge call wall, which blocks the market from being able to go up too much. And that's through like the OPEX of this month. It's through all the biggest options expirations. And there just seems to be this trapping of the market in this effectively pullback in time. So waiting for more evidence there. It's one of these points where single stocks, certain ones will be okay, certain ones won't be, but we are trapped in a zone. Speaking of trapped, it's just Tesla. Tesla's trapped. 320 now is the call wall. And 280, 300 is the put wall. We're trading at 310. That's the middle of the zone. Nvidia certainly did find buyers, though. That big announcement on the chips, it pushed it straight to 170, which is now the new call wall. And I had a target of 175 on this. So yeah, I mean, we are close to that point. So did we spike out? Are we going a little bit hyperbole here on Nvidia? Possibly. But it's getting right to that first zone. But remember, Wall Street's upgrading it. So it's all about those tech earnings coming in very, very soon. Let's have a look at the bonds market. Has it shown any signs of freak out over the last 24 hours? The answer is no more than it did have. Certainly a canary, certainly a warning sign. And generally, this basically says that maybe it's best to have a little bit of powder coming into this Q3 period. So that just basically means a little bit of money to have to allocate to certain things. Makes some sense. And then US 30-year here, we've got it testing the 5%. So not at critical points where everyone freaks out, but certainly there. And it's the same thing with the Japanese 30Y as well and 40Y. They all are showing those issues. Let's jump on over to the banks here. So you can see here that it looks like we've kind of got a sell-off off that earnings result. It was a beat. They all were. Like, let's have a look at JP Morgan here for a second. And they were all technically beats, but they all sold off. And JP Morgan on the small time frames has taken its low recently. It pressured the 20, which we know is the big area. And what JP Morgan does, generally the financial market does. And then it rejected the last 24 hours with a shooting star. That's kind of a negative pattern. So if that now takes a lower low that is underneath 280, it kind of signals that we don't have the financials coming with us anymore. And there could be some cracks starting to show up down to these levels. So certainly not as good as it looked. And it's something we suspected might happen into these banks because guess what? From the last earnings, let's just quickly take this last earnings here. And I did this with our private community. And I said, look, the stock has been up 31%. That's a ton for, of course, a bank. And, whenever you get an earnings, even if it's good, the markets usually price those ones in with that type of movement. Gold is still bullish. No new movements here, really. Generally speaking, this is kind of the area you'd like to see a bid come in, but it's still just kind of like sitting in a zone. Nothing too exciting on the gold charts. Silver, fine. I mean, obviously it's pulled back since its big breakout. That's to be expected. And we're not really at a level to say, wow, I think this is going to, excellently move up straight away or anything like that. But if you do get a rally through this previous high over here, that's kind of signaling, okay, we can go test these highs and potentially move towards our eventual technical targets, which are like 42, 43. US oil, nothing. Still neutral. I know you guys say, well, why you bring that up every day if you're neutral on it? Because people do follow oil. My thoughts have been in every other previous video, so you guys know what I think. And Tesla here is in the middle of nowhere. So it's not going to break 320, it seems, and it's not down at 280, 300. So it's in the middle of the zone. Semiconductors, you can see here, good announcement, little bit of a boost. It's still technically well overbought. So because I've got overbought signals here, even with the good news, I get it. It's pretty good. Okay, it's pretty good. But the market still looks a little bit overbought on semis. And sometimes it's this type of news that gets you trapped and you go, oh, wow, look how good this is. Fantastic, to the moon. Yeah, I still think that it's not that great. But semiconductors absolutely smashed the SPY over the last 24 hours. So we're still in strong. I think it's more of a hold and wait and see for this earnings season. Where things do look better, though, is China. China probably stimulating their economy again. And you know what I think about China. It's all about central bank liquidity. Inject the money, it pushes forward. And that's what they've been doing. When they embark on an injection style concept, they usually stick with it for years. So every single time something goes wrong and you get all this negative information, which actually is what happened literally just 48 hours ago, then all of a sudden they go, wow, and the markets start to ramp up and you're left wondering, how did that just happen? Well, we saw a few other catalysts as well. Barber in particular, it looks like their Ant Financial kind of woes ended. Let's see if that comes up. And you'll notice that's like an island reversal to the upside. Do I like Barber? Not particularly as a stock, but the thing is it has bounced. And of course, it's got that little bit of a positive catalyst and that's driving into the rest of the markets. When you look at US 2K, not that good on the charts, hit the supply. I think most technical analysts will call this a head and shoulders. And I would say that's actually kind of a careful point there, but we are right on breaking that neckline. So not a great sign. And if you actually take this distance here and you actually extrapolate this out, we'll do that together right now. What you're going to notice is it comes back down to around 2130s. So that is a real distinct possibility. Certainly some weakness here in the small caps. And I continue to look at IWM versus SPY, which we'll keep bringing up on the show. And that ratio is not broken the 0.365. So yeah, no movement yet on those. What about US dollar? Yeah, US dollar did break the downward trend line. I've obviously been bullish on the dollar into this area. So congrats on you if you did get that. I'd expect it to probably sell off a little bit now and then potentially even rally up. It just shows you when you get good zones that things start to turn around. So if you've been following this channel for even the last week or two, you will have noticed that everyone was totally bearish dollar, but things changed underneath the hood. It's not that I know about secret flows or something, but what we could see is structure started to improve. That's what led us onto this relief rally. So that was a pretty good one. And of course, now it's at that neutral area where you might see a little bit of a sell-off into that trend line, and then we'll find whether the buyers are still there. Altcoin market seems to be relatively strong. Look here at the old Ethereum, getting closer to that 33, 34 area. Certainly a big one there. XRP, something I've often disliked, but obviously allowed to be free a while ago. It's got that big news here about the exchange traded funds, etc. But in general, still a pretty strong trend. And Bitcoin, of course, which leads it all, came off back to the first support of 117. I'd probably be looking at 113 as well, which is the daily 20, but still in an overall upward trend. So you kind of got like upward trends coming in here from things like the crypto markets, the silver and commodities markets. And then you've got kind of like a real question of, has the AI run kind of led itself into a buy the rumor, sell the fact? What do you guys think? Put it down in the comments down below. Really appreciate the comments recently, guys. I hope you've been enjoying the show. It's been a bonanza. And as we say, abundance mindset. You know, there's always another opportunity. You think you missed semiconductors like that Nvidia meme? Well, there's always another one on the horizon. And I've seen thousands and thousands of opportunities in 17 plus years doing this. And you guys have as well. So just remember, another one on the horizon. Don't worry about it. And will we get that sell-off that tends to happen around these next couple of months? We're watching very closely, and these trend lines will matter. Catch you guys. We'll see you in the next one. Bye for now.